Greetings, everybody. This is Jeff Scott. This is my top-down review for Memorial Day weekend. It is 5/24 in the year 2020. And even before I start, I'd like to thank those of you who served and to remember those who served and those who served and didn't come home. We wouldn't be here without the military and those that have, for over 200 years, protected us and maintained our freedom, even with things like coronavirus. And also, I think it's also important on a day like today to remember those first responders and the hospital workers who every day they go to work put themselves at risk. You think about where we are this year, just to opine for a second. The world shut down. The economy in the United States has shut down. The market went through a major pullback. Unemployment is highest as it's been through the Depression. You look at the Johns Hopkins map and you see that this is a virus that's affected every country around the globe. Even Russia, which in the beginning seemed to be doing well, is the second highest, just behind the United States. You can see hope signs, green shoots appearing where people are going back to work and things are opening up, yet without a vaccine, it's only inevitable as a physician for me to believe that we'll see further episodes of coronavirus this fall pick up. And then to think that I'm up in the market and many of you are up despite all that, it's just amazing. So I guess we should be thankful that the market stopped falling. There's been an opportunity for us to rebuild our nest eggs. This is clearly a market where being a stock picker has mattered. It's my favorite kind of market, and it's a market where up until maybe Friday, growth mattered as well. So enough wasting your time with just my thoughts. Happy Memorial Day, and let's get going. I call today trading sideways at resistance. As always, for education purposes only, I'm a doctor, not a broker. I'm independent. I paid for my tools, and trading involves risk, and you alone are solely responsible. I like to call my trading style Be Your Own Guru, which is a mixture of Can Slim, John Person, and others. I have a lot of different tools. I use TradeStation, Thinkorswim, especially with Dr. K and Sagar's tools, and John Person's package, and then HGSI and EdgeRater for my analytics. For those that don't know HGSI, this is the website. They offer a free 30-day trial. Under investing strategies are a number of videos. There is a learning curve to the software, but bar none, it's the strongest, best tool for analyzing the market, bar none, and I have them all. Stock patterns are cyclical. Clearly, in late February, we had the big sell-off. March 23rd, we had the big recovery. We've gone sideways for 4 weeks or more. We are definitely at the top of this channel, which is the uncertainty. We can break higher if you're bullish. We can certainly break down and even go close to retest. If you're bearish, nobody knows. You can listen to Twitter, you can YouTube, wherever you want to go, and people will tell you what they think. I tell you what I think. We're not the market. We're predicting the market. I'll play the market I get, but I want to be prepared for what I think we might get, which is what this is all about. Since I'm in this uncertain stage, I've raised cash, I've got smaller positions, I've sold premium. If I look at my sector review, this is in TradeStation, and just for optics, I have the indexes, financial futures, I have currency futures, I have grains, metals, grains, metals, energies. I've got the precious metals here. Then I've got some soft goods, and that's the end of the futures. Then I have the sector ETFs, and then I break down in the 11 sectors of the S&P 500. When I look at this from 30,000 feet, I see a sea of green here in the utilities. Where else do I see strength? I see strength in consumer staples, not a big surprise in this market. Maybe the financials and the energy are the weakest looking ones right now. And certainly up here, which is discretionary, some of the retail names look weak as well. Very quickly, the major markets, I usually go into Thinkorswim here directly, so let me do that, make a few comments, and then jump into something on TradeStation. On the top row, I have the S&P futures, the NASDAQ futures, and the Russell futures. They're all the same. They all have that big uptrend. They all peaked on or around February 21st, 22nd. They all had major sell-offs, and they've all had major recoveries. They're different in the studying that the S&P is right below the S&P 500, its 200-day moving average, excuse me. The Dow is further below, both going sideways. And then the NASDAQ is the strongest, where it's broken above its moving averages. It's above the 17, and the 50 is just curled above the 200. So 3 stories, a little bit different position today. Clearly, the NASDAQ has been leading the market. The one that never made a new high this year was the Russell. It sold off, and it sort of looks a lot like the Dow going sideways, trapped between the 50 and the 200-day moving averages. The VIX futures have fallen hard, are still elevated compared to where they were before this mess started, and the dollar has been pretty much going sideways. Now, what I watch during the day besides that is I have in TradeStation a series of indicators that I use. And very briefly, E-minis, NASDAQ, Dow, and Russell futures, the same order as before. I put Fibonacci's from the top of the market down to the bottom of the market. On each of these, I probably ought to redraw. Yeah, let me redraw this one here. So let me... No, I'm not going to get into it now. But I could redraw this. This one should be a little bit higher up here. And that will pull everything. Let me just pull this down. All right, yeah, I'd have to redraw it. But basically the point here is simple. We sold off hard. We pulled down and had a reversal. We've made our way part of the way back, almost all the way up on the NASDAQ, trailing on the other indexes. We had a series of bearish headwinds and stretches at the top here. We have bullish at the bottom, bearish, bullish, bearish, bullish. When I say bearish, I'm talking about these dots and these pluses here. Here was the high before it rolled over, and blue and green are bullish. I look at the high and I see the Roy Kelly cycle with the red line, which is when I look at, say, a significant cycle high, at the low, a significant cycle low. At the high, a high, at the low, a low. At the high, a cycle high, at the low, a cycle low, and so on and so forth. I look and I see today on the NASDAQ, I've got a high, cycle high, same as I do on the Dow. That is concerning, because once that red line is there, it's done. And that tells me to expect the market to go the opposite way. We have been living between the Fibonacci lines. We broke above it. But for most of these indexes, if you look at where we were a month ago, certainly the two on the right, we have not taken out our highs, and we closed below the monthly high, the April monthly high in the E-minis, although we did move up above it for a couple of days. So I look at these things and I get a sense of what the market's doing. I see a lot more red at the top than I see blue and green. So that tells me more concern that we are nearing a cycle top. All right, back to the PowerPoint. Yes, this is a PowerPoint for the first part. These are all charts that I did last night, so they're all current charts. Weeklies, go on. I like to look at certain things underneath. Rates turned up on both the 10-year and the 30-year. If you really want it to be aggressive, you could say there's a higher high and a higher low. I'm not saying that because with the Fed on the sidelines, it's really just bouncing on the bottom as far as I'm concerned. AD lines and indexes turned up, whether you look at the small cap or the large cap. If you look at the NYSE, you see the same thing. All the major market ETFs, the table is here, turned up. The only thing that turned down, well, if rates are up, bonds are down. That's the TLT. Breadth remains strong but not overbought. If you look at stocks above the 200-day moving average, we are at a point where in prior pullbacks, including 2009, the market did not go down further beyond that point or did not set new lows. It doesn't mean you can't have backward filling. Here's the stocks above the 40, getting near the top but not yet overbought. 2121, 3-month new high or 12-week new high, new low, 2/3 up, not at the range where you expect a reversal, but at a range that's approaching but not yet overbought. On the McClellans, the daily and the weekly, I look for extreme readings as taught by John Person, divergence of price and oscillator, summation, and zero-line reject. I guess a few days back we had a zero-line reject on the daily and the weekly. Other than that, I don't see anything, so I don't see acute signals on these. The buckets, I look for a level of, are we overbought, oversold? I take all the stocks, the S&P 1500, I hit a button, and an edge rater gives me this wonderful report. 68% of the stocks in the S&P 1500 are above the midline in their Bollinger Bands, 32% are below. Stocks less than zero, stocks greater than one represent those buckets that are oversold down here and overbought. And when I see these above 20 or 30%, I pay attention, so there's no signal here. The Hindenburg omen is a signal of market tops and a omen that predicts perhaps a major pullback. And we did see them earlier in the year, right before the market rolled over, 210 and 224. And they were pretty spot on. We won't see one until we get to new highs again. Market tone, we look at the Woody indicator here. Across all major indexes, they're green. That's bullish. Notice that the amount of volatility is reduced in the market. Sector strengths here are strong except for, I believe that's staples and healthcare. Healthcare had been a leader in the market. It's become a little rocky of late. You can see again the volatility has come out. People ask me, well, Jeff, you keep talking about Sagar's Q tools. I did a video on his stuff recently. Two questions come out. How do I use them? And then, isn't this anti-HGSI? Well, let's answer the second one first. If I thought this was anti-HGSI, being that my email is hgsidoc and I've been a strong supporter, why would I talk about it? It's not anti-HGSI. It does things that HGSI cannot do. It is running on my computer all day long, telling me sector strength. I could look at leading sectors, industry groups, and do a top-down review, real-time data in the market. I can't do that with HGSI without constantly hitting a button. I have this on one screen. It is a wonderful tool. It does fundamental analysis extraordinary where I could look at what sectors are leading, pick the industries that I'm interested in, and then show me what are the components of that industry. It even has a tool where I hit the stars and the leading stocks from a fundamental perspective come to the top. These are very cool things. What doesn't it have? It doesn't have its own data source, so I have to pay for Metastock. Since I already had Metastock, it wasn't a big deal. What else doesn't it have? Oh, it doesn't have a charting platform. HGSI works just fine for that for me. So I see this as a compliment, but I was sitting during the day on Friday. First thing I noticed that 8 out of 11 groups were positive, but there's just little nubbins here. It was not a big movement day here. I see that over 2 days, 6 out of 11 were positive, so that meant Thursday was a softer day. That would be the middle one. You can hardly even see anything. And then over 5 days, over the week, especially after a super strong Monday, all 11 sectors were positive. I can do the same analysis here 1 week, 2 weeks, and over a month. Over a month, 10 to 1, the only sector that's been negative has been utilities. During the week, I can break out and look at the AD lines on sectors, industry groups, and stocks. It's a nice tool. It's running in the background. I can go to the next page and I can look at the leading sectors either by ranking or percentage. Now, one little anomaly, and I asked Sagar to see if he could put a button to make that go away, is you notice the 0 and the 1 are the same. Well, it's Sunday, so the markets are not open today, so I'm going to get the same answer that I got yesterday, which was Saturday. If this was yesterday, I would have had Saturday in the 0 and Friday in the 1 day. They would have been the same. Where it's not the same is on Tuesday, I'll have Monday will be the 1 day and the 0 day will be Tuesday during the day and after the day. I think that's confusing. I would like to have a button that would allow me to collapse these two on the weekend if I didn't want to look at 0. But that's just a small point. Let's say I looked at this and I thought that information technology was interesting because it was strong. It got weak, and now it's getting strong again. So I might highlight information technology as I did here, click on the gears. When I do that, I open up all the different industry groups. Again, I'm looking at data processing and outsourcing was strong. It stubbed its toes, and it's strong again. So I might highlight that and click on the peers. That would open up all the stocks that were in, and it's a limited universe. It's maybe 1,500 stocks are in the universe on Edge. And I now list those stocks in the S&P 1500 that fall into this category. And then I hit the star, and the top bunch comes to the top, which was this TTEC. I then put this into Vital. I printed out a larger list, automatically a larger list of stocks, including some non-U.S. exchanges sometimes Korea will pop up. And then it gives me fundamentals, it gives me valuation, and I could go look deeper and look at all the different stocks as I did in the beginning. It is a top-down tool without charting and without its own data that stands on its own, and it's a great supplement to HGSI. Canaries in the coal mine, I put together a solitary index of what I consider the extended fangs, and we are below new highs, but we've had, I did this earlier today, we've had some massive move down and up, not quite to highs, but a great rebound off the bottom. On the right are Ian's boxes. Ian introduced us to these, 20, almost 30 years ago. I think the first set I saw was 92. And Ian found that he could categorize stocks by earnings per share growth annually and over the last 2 quarters. And he could build a 9-box grid. And that 9-box grid on the upper left was 100% quarterly, 50 to 100% quarterly, and 100% annually. And he filled out that grid, would put the stocks there and look for those stocks to start breaking out. And when he saw that happening, he knew that the market had bottomed. You don't know on a given date that the market bottomed. It'd be great if you could tell that without having to know the next day. What he found was that stocks in the boxes outperformed off of almost, if not every bottom. So to be a box stock, you have to have 5 years earnings and revenue growth or earnings growth, and you have to have grown over the last 2 quarters. Here are the various boxes. We compare this to the S&P 500, and we compare it to the stocks that have high earnings, relative strength, and group rank. I required an ERG of 240 to be in this list, but not all the stocks with an ERG over 240 were a box stock. We then look at the performance from the bottom of the market on March 23rd until today. We look at an equal dollar investment of $1,000 per instrument, and what do we find? The S&P is up 32%, ERGs alone are up 36%, and every box is performing better than the S&P. And some, like box 6, are 2.5 times, box 4 and 9 are double what the S&P is. So once again, growth stocks, which are what's on in the boxes, outperform off a major bottom. The left-hand side's a little bit more confusing. This is a performance of the various groups that I like to watch that give me a sense of what the market's doing over the last week. And you'll notice that the IBD 85, which is the weekend review, which are strong stocks and strong groups, was up less than 1%. That the the IBD 50 was up 1.71. My stocks were up 1.74. The Market Smith was up 1.82. So growth was up nicely on the week, but the S&P 500 actually was up even more. It was up 3.2%. This is the first week in many that growth trailed. The other thing to point out, if you look at what did the best on the week, there were bottom fishing, stocks and groups to the downside, small and big, short sale stocks, and negative earnings growth stock. So this was a week where I think junk off the bottom, such as casinos, airlines, hotels, actually led. Know your news and earnings dates. I don't think this is a huge week of news. We'll get some how low can they go or how high can unemployment unemployment B numbers on jobless claims on Thursday. They didn't even give us an estimate, 5 million, whatever the number will be. The rest of the numbers are weak. Everybody knows they're going to be weak. The issue is, what do they look like next month and the following month when some of the impact of reopening occurs? So I don't think that is going to be the big news. And we also know the Fed is not just on the sidelines. They came out last week and said they got more things that they can do if necessary. On the right, you have the big earnings for the week coming. As I look at it, there's a lot of software stocks. Anaplan was one, Dropbox, Autodesk, Workday, OKTA, Salesforce.com, Viva, Zscaler. So I'd be careful with those. Just, you need, as I say in the lower right-hand corner, it is a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Thoughts. Market moved up on the week led by the Russell. Overhead resistance is close. Memorial Day usually kicks off a seasonally strong period, so the bulls can hope that we get a breakout before the sell and May crowd takes over. NASDAQ 100, big tech and healthcare have been leading the markets higher, but they paused on Friday. Like many of the folks I talked to, I'm up a lot on the year. 30% plus is not a great year, but it's a pretty good year when the markets are pretty flat. I've been taking profits on rallies and raising cash. And, you know, one thing to keep in mind is I'm up that despite the fact that I've continued to have at-the-money puts on my major positions. I pay for them by giving up gains, but I also sell out-of-the-money options against them. News will continue to dominate the markets as Fed has declared they have more weapons to bear. Vaccine headlines such as Monday can skewer the bears, while political divisions will stir up the markets. And we're getting into summer, and after the next week or so, one might expect the sell and May crowd to make some noise. I wonder if this is the week to break out, or if not, a sell-off is in the cards. All right, let's take a look at some charts. It's the weekend, nothing's real time, and those were all charts that I picked up that I did last night. So let's take a look at the major market indexes. Let's put the top T1 top-down view on, and raw combo to the top. Russell 2000 is the leading group, mid caps, small caps. On the bottom, you see the larger things, S&P 100, S&P 500. That is different. Very quickly, S&P 500, daily on the left, weekly on the right. For those that are wondering what the hell are all these indicators, just realize blue and green are good and red is bad. We are sideways for sure on the S&P. This is the 200-day moving average. I think it's at 29.99. and 70 some cents, something like that. That has got to be where the line in the sand is. Let's see, how close am I? $29.99.72. All right, that is the line in the sand. If we can break above it this week, then we got blue sky ahead. I am concerned that if we don't ultimately break above this, then we're going to fail. And if we fail this, we're likely to go on and not necessarily go down to new lows, but we'll probably test some of these Fibonacci levels. Now, this is the 200-day moving average. The last time when this market rolled over, it stalled the fall. It went sideways for a week, and then it dropped. If we go back in time, we can see almost here, 200-day was support, near support here. We knifed through it and quickly got back above it. Support there. Support there. Prior to that, it was resistance here. It was resistance here. It was resistance. It was resistance. So what often is support on the way up becomes resistance on the way down. Right now, this is considered resistance, and I'm just concerned if we don't get above it quickly, then the sell in May crowd is going to pull us down. That's just one person's opinion. Mine, take it as you like. Dow Industrial Averages also range bound in between a couple of fib numbers at the top of its range. I drew this weeks ago when we had a hammer and a shooting star, and I said, until we break above or below those numbers, I don't know which way the market's going. We are still confined. We're at the top of that range. If I look at the NASDAQ, it looks different because it's above the 200 and pull back a little bit. I wish all the markets looked like this. This is super strong. Here's the 200 down here, folks. Came up, sort of retested. If all the markets looked like that, I'd be thinking we'd have clear sailing ahead, but they don't. But this is the leader right now. And the Russell 2000, which never set new highs, looks like the others further down in its pattern. The dollar, I made a comment earlier that I consider it going sideways. Well, if you take away the spike up on the recovery and the spike down on the market dump, this dollar is sideways going back to, that's December. How far back do I need to go? Probably until, it's flat. I mean, what can you say? The dollar is in a flat trading range, not much going on there. We talked about the VIX earlier, that it had come back down. I think it's below 30. This is great. It's still much higher than it was. Gold, which had a nice run, has softened a little bit on Friday. Bring up some more of this here. Had an inside day after a bearish day on Thursday. Silver, inside day on Friday, had been in a big run up. And then where I've been in a couple of as well is gold miners. And they've certainly paused. I'll leave that word. They've had a big run and they're slowing down as well. So that's just a sense of the market, since many of you are IBDers. If I look at the Investor IBD Fund ETF, this is an ETF that's managed of the IBD 50 stocks. Hard for me to see how you're making a lot of money just trading the IBD 50 right now. It's underperforming the NASDAQ. If you're trading IBD 50 breakouts, this is an ETF of that. It actually looks a lot closer to the NASDAQ. All right. After I looked at the market, so what is my sense? My sense is this week could be positive, but I have bigger concern looking forward that we're going to pull back. So that's going to temper my buying and selling, but that could change on Monday morning. We have 175 industry groups. I go to the 2-day force, and I could see I've got 76 groups to the positive. I've got only 17 to the downside. So leading to the downside on Friday were airlines, life insurance, diversified, which is big banks, healthcare supply, trusts, fiduciaries, computer hardware, steel, lodging, consumer electronics, entertainment, a lot of traditionally growth-related groups. If I look at a longer window, 5 days, I've got 97 groups up. And on a longer window, momentum, I've only got a handful of groups to the downside. So if you want to go against me and say you're really bullish and Jeff, you're wrong, and I certainly could be, I'm a human. I'm not saying I'm right. I'm just saying how I'm playing. That would be evidence that the market's stronger than I think. I don't want to make this a forever meeting, so I'm going to look at the top 5 groups here. So let's do a right click on e-commerce secretary, discretionary, change index group, Pindaloo. We've been talking about this. You buy these things on pullbacks. It broke out here. So this would have been a great time to buy it. It pulled back here. It pulled back here. It broke out on Friday with a Bible gap up. It's a little bit too far gone for me. It's bouncing up at its high jump. Beautiful pattern, beautiful picture. I want to go back here and ask Jeffrey, why didn't you buy it on that mobile breakout squeeze breakout? And the answer is because you can only buy so much. So I'm not in it. I've talked about it. Probably too late. Revolve. Oops, hold on a second. I want to go out. I don't want to go out. I want to go. Mercado Libre, the eBay of South America, breaking out to all-time highs. I did spy it down here on the Bible gap up, before the Bible gap up. It was interesting. I liked it. I should have bought it. I didn't buy it. You can't buy everything. eBay also looks good. We'll see that in a second. I do like Chewy here, and Chewy will be on my buy watch list. It came in with a mobile breakout squeeze and a kahuna on Friday. It is right below its PSAR dot. I would put a buy stop just above that. So make sure it trades up before I jump into it. eBay, like Mercado Libre, doing great. And then Hgsi is another interesting one. This is a crafts like eBay. I've made a lot of money on the stock in the past. It's pulled back to the 17-day moving average. It's interesting here, to put it mildly. But I got to see some positive momentum but it may be giving us a chance to get back in. I'd like to see some momentum before I go get in. Chegg, they make textbooks, online textbooks, and you can see that they're starting to go sideways. They make some money. They've had a nice revenue growth. They've been a winner in the COVID economy. They are extended. All right, so there's a lot to like in e-commerce. Application software. Some of these have earnings this week. Twilio, great run. How do you buy it here? I can't buy it here. Maybe it goes to 400, but it's too extended for my taste. If you own it, pat yourself on the back. I'd probably hold it and put stops on it. If you don't have it, I wouldn't be chasing it. I am probably wrong. It's probably a great buying opportunity. It's just too stretched. Scout, too far in the pattern. C Limited, like Twilio, I own this one. I'm happy I own it. I have tightened my stops, but I'm still in it. Live Ramp, this is interesting on many parts. It broke out on Friday, Bible Gap up, and a Kahuna. Had a mobile breakout and squeeze the prior couple days, which was an earlier buy signal. It's been in a John Person buy signal since back here with that mobile breakout. It's in a downtrend. It took out its descending trend line. The challenge is you're going to have to put your stop probably here, which means you're giving up probably about 10 to 12% risk, which is more than I want to take. But Live Ramp looks interesting here. Earnings are out. Workaday, earnings are this week. Plugged its head above the 200-day moving average. If it wasn't for the fact that it had earnings this week, I'd probably be interested in it. MongoDB, I once owned this and lost money on it, and then it goes up into all-time highs. Story of my life. 3.4% demand. Same story as Twilio. I don't know how you buy it here unless you know something or you have a better stomach than I do. Anaplan, it has earnings this week, like Workday, sticking its head above its 200. Salesforce has earnings this week as well. So there's a lot to like in this group. I like Salesforce as a company, as a technology, and as a stock. I just nervous a little bit with earnings. Biotech has been up and down. You have to know what you're buying. So they just give you the cancer doctor's viewpoint on buying biotech stocks. Buy the ETF, LABU if you want to be long biotech, and LABD if you're short. And the reason is this. You have a lot of small stocks like Surface Oncology. Surface Oncology is a preclinical company. They've got all these compounds. They make no money. When they get money, it's typical they did a licensing agreement. They burn revenue, and they continue to require financing. Okay? If you go back here on a prior breakout, it had 774,000 shares. So there was absolutely no reason to be owning this stock. Here, they traded 169,000 shares. The next day, a doji, it was down, they traded 10 million shares. You don't think that somebody knew something was going on this day? And they're licking their chops. So I do look for volume signatures like that. Unusual volume. The next day, the stock was up 45% on 11 million shares because they took an outside investment where a big pharma or biotech came in and said, we want to partner with you on one of your outstanding new molecules. Now they got validity. The stock ran up on hype and story, 79 million shares. And then on Friday, it gave back some on 7 million shares. Now, in my experience, well, there are three things that could happen here. We could go to the moon. We're the next Moderna. We could. I doubt it. We turn out that it's really nothing, and we could fall like a tank and go back down to the baseline. Probably can do that. what's likely to happen, in my opinion, and then probably start going up later. So I don't usually buy this. I wait for it to settle down, and I'll buy the next breakout after it gives a little bit of a sideways motion. I've played these over the years. That's the story. Now let me tell you a little bit else about biotech. The American Society of Clinical Oncology meeting is the first weekend in June, virtual this year. That's where a lot of news of these compounds come up and cause the stocks to rally or fall. Are you aware that in the second or third week of May, the abstracts of that meeting come out and the analysts scour them so that they know in advance who the winners and the losers are, and the stocks move? You don't even know why it moved. Then a biotech company, besides announcing a licensing agreement anytime, might announce positive data or negative data anytime when the data becomes available. So it's like earnings reports, but you don't know when they're coming. And then there's takeouts. And then the other thing that happens in a company like this, and I don't know if Surface did it, is once you have a run-up like this, just think about it, you're selling a couple 100,000 shares a day at $3. And now you're selling 90 million shares at 6, 7, 8. What's the first thing you want to do? Yeah, exactly. You want to print new stock and do a secondary. Not yet. We're collaborating with Merck. $30 million, which is not even at the money, not much money at all. So because of a small investment on a teeny weeny biotech, with the stock went up massively. I think it's great to get in early. Unfortunately, most people I know are buying it up here and then wondering why the stock dropped. Biohaven Pharmaceuticals, don't know anything about this. In the neuroservices, broke out here. It's an interesting chart. I actually put it on my buy watch list. They got kahunas out of a squeeze. Altimmune, you see this day here. This was the clear buy day off the 50. A kahuna, a New John person signal, mobile breakout from a squeeze. I think that's very interesting. I wish I would have seen this and bought it back then. That is a pattern that I like. On the weekly, it looks a lot like Tandem did, which I bought at 5 or 6 and went up. Still have it at like 85. That looks like an interesting story. It's already run some. Here's its pullback, and then it took off again. Don't know anything about it. Interesting pattern. Allogene, this one popped here. Why? Because I bet this is about the 18th of May. Let's see. 15, 16. When is this? 13th. This is about when the abstracts came out from ASCO. Okay. Iovance, another immuno-oncology. This is the hot part in immuno-oncology. It's had a big move, a little bit extended for my taste. Bluebird Bio, another oncology play. Higher highs, higher lows off the bottom, but it's still in a downtrend on the longer time frame. BioMarin, I like this one. Sideways move, mobile breakup from a squeeze. New buy signal from person, pocket pivot, and a kahuna. Specialty Pharma, boy, was I right last week. Every once in a while, a blind squirrel finds their nuts. I pointed out a series of pot stocks. Didn't know what was going on, but I noticed they all the same pattern. Dead to me. And then on Friday last week, we had a second kahuna in a row, a PPS buy signal, mobile breakout from a squeeze. And I said, something's going on with marijuana. So ACB gapped up on Monday morning. It's gone sideways since. Tilray, once a $300 stock, traded up on the week. CGP, I did get some ACB after a pullback, but I ended up pretty much flat on it. But I made money on this puppy here. Canopy Growth. So what drove marijuana stocks this week? I guess there's one more, Kronos. What drove marijuana stocks this week was ACB bought a U.S. company so it could have a opportunity for distribution of their product. It's a oil company today, CBD oil. And then later in the week, you're going to love this. Marijuana treats COVID. That was some news that came out from Canada. Really? Okay. So I'm holding them. We'll see where I go. Horizon has been a stock that I've been in and out of. I'm not in now. It made a lot of money for me in the old days. It's had just a beautiful run up. It was really strong fundamentally in here. I'm not in this thing anymore. I wish I was. Too late to get on board. And then this one I did get on board on Monday. Friday, Thursday, Wednesday. On Monday it had a big up move, mobile breakout from a squeeze. Why did I know this? Because on Monday it showed up on a number of my Q tools. I don't have it open, but they have stocks moving now. It also showed up on my TradeStation screens and my Thinkorswim screens. So I'm still in this. It took out the 200. I had a buyable gap up on Friday. It's running. I didn't know what it does. Bunch of genetic diseases. I buy on the charts. Sometimes I don't even care what they do. All right, back in the fifth one, gaming. Now last week I talked about Penn Gaming, and oops. And I wish I would have bought Penn Gaming as it broke above the 200. Had a very nice run. Why? I suspect that some of their gaming is outside Vegas. That's been opening, and Vegas announced on Friday after hours that it's opening up June 4th. I did buy about 2 weeks ago El Dorado Resorts, and it's had a nice move up as well. Not necessarily to the extent of Penn. It has not broken above its 200. Red Rock is another one, breaking out and moving up. I also bought some Win. We'll see if it pops on the June 4th news. Off its bottoms, but really hasn't done much compared to those. So that was the top 5 groups. On the essence of time, I'm going to limit there. I want to talk about my buy list for the week and a couple of other things. Now, first thing is, yes, I have 34 stocks in a buy list. Okay. How am I going to buy 34 stocks? I'm not going to buy 34 stocks, but I'm going to watch them. So I'm going to do a couple things with them. In Trades and Thinkorswim, let's go to Market Watch, and let's just go into buy list. And let me import the current week because I haven't done it yet. So import, select file. I create a Word document. All right, so these were the stocks that I thought were interesting and that are on my buy list. All right, for some reason it's been doing this to me a lot where it's locking up. So what I'm going to do is pause this. Okay, so in Market Watch, which is the radar screen equivalent of Thinkorswim, equivalent to that in TradeStation, it's got some good things and bad things. The good thing is this is going to run all day long, and oh, by the way, I could do something like detach this, and I can go stick this on another computer monitor. All right, so it's going to always be in the background. I have included here the stocks that I'm looking at potentially buying, and then I have some of my favorite indicators. So the one-day market relativity is a short-term momentum buy-sell signal. Almost all of them are having a buy signal. You can see the 1.0s. VP is an attempt to recreate a moving average crossover that's in a commercial system. No, I don't sell it. I'm not cheating. I'm not doing anything with it. But I actually own the other program. but trying to import it into Thinkorswim. I talk a lot about Dr. K's Lagar RSI, so I will look through the day and see, boy, who's got a new momentum buy and my moving average crossover, and I might find something like this one, Maxar. It had a buy signal, a moving average crossover buy, a kahuna, a pocket pivot, a Bible gap up, the Lagar RSI is positive, and the stochastic says to go long. Okay, now I bought this on Friday, intraday, when I got this signal. Let's go take a look at it. I look at two main charts in HGSI. One of them is that moving average crossover system, which gave me a buy signal there, crossed over here. And this is Dr. K's Lagar RSI. I like to buy when it crosses above the green. So this would have been a buy point, a little early, but worked out okay. This would have been a buy point, short gain. This would have been a buy point, short gain. This would have been a buy point, short gain. Well, I had a buy point on that hit Friday. Okay. I also look at Dr. K's seasonality tool. I don't know if this one's been around long enough to have seasonality, but let's just go and look at the chart over here. And it doesn't have enough time to be seasonality. All right. I've got a lot of things running, so it's taking a little bit of time to draw. And this is the chart again. Notice this really good run, it occurred after the signal down here on the Lagar RSI. So I use Market Watch during the day on positions I want to watch. And what I typically do is I do detach them and I put them on different monitors. There's a limit to symbols times columns that is much smaller in Thinkorswim than it is in TradeStation. Now in TradeStation we call it radar screen. So in radar screen I've got a series of indicators, Q, signals, some of the HGSI stuff I use, earnings date, a critical signal, and then John Person signals. And then I run the different stocks down here and I look for color bars popping up or changing. So I can monitor my buy watch list during the day. The other thing I can do is I could scan. So if I wanted to scan for stocks with that short-term momentum indicator, I can hit scan. Every one of these stocks is going to have the 1, or it shouldn't be here. And then I could look and see how many of them have my moving average crossover system and a Lagar RSI. And I see, oh, AMT. Huh. Maybe I should be interested here. Let's click on that. Let's take a look at the chart. And what do I see on AMT? I see that on Friday it had a new person buy signal and a big move up. It's right below the chandelier stop. The Lagar RSI is just turning positive. I like that. It's not too late. And then this white line is predicting seasonality using Dr. K's seasonality tool, which is strong. So that AMT, which is one of the stocks I picked, that might be enough for me to trigger there. But are there other things in this scan? Let's see. Here's AMT. I like that one probably the most. So I'm looking for a cluster of positive signals. CERS. It's a cheaper stock. It's got my momentum scan positive. It doesn't have the moving average crossover. So I will go through my stocks like this, one by one. What do we have down here? Inseego. Oh, I bought this one on Friday too because it showed up on my scan. On the charts on Inseego, the fact it doesn't have a white line just means it doesn't have enough time. Pull back to support a new person buy signal. The Dr. K Lagar RSI turned into a buy signal. And if I go and I look at my moving average crossover system, I got a buy signal came in today. Here's the Lagar RSI. So this is what I do during the day. So back to my buy watch. That's how I monitor this number of signals. And you'll see I've got some REITs. Let me tell you about REITs. Not a great time to be buying REITs if they collect rent from department stores, office buildings, or homeowners. But what about rent that's being paid? I highlighted during the week Welltower, or one of the medical trusts. I talked about the stimulus check that went to physicians and their practices to keep them in business, so I think that's probably a safe bet. How about cell phone towers? AMT, pull back to support. Mobile breakup from a squeeze, a kahuna, a pocket pivot. This one's easy for me to buy. I would have a buy stop above the PSA, above the prior high. We know that the chandelier is up here. I don't trust that chandelier. Let's put it that way. That's not correct. That's not where it's sitting. I'm not waiting to 250 to buy this. I'd put a buy signal right above the high of the day. I would set a stop. Probably the easy stop would be right below the 200. I might raise it up to the 50. But to me, that looks good, but it has to trade up on Monday for me to be interested. Cell towers. How about Crown Castle? Also cell towers. 3% dividend, pull back to support, buy signal. All right, that's another one I might want to be looking at. How about storing of servers? Cyrus 1, 2.7% dividend. Or how about POT? POT. I'm talking REITs, Jeff. Oh, yeah, IIPR. What do? Specialized industrial properties leased to experienced state licensed operators for medical use cannabis facilities. A POT story with a dividend, 4.1%, and great earnings per share growth. So I like some of these REITs. I put this one in here to watch. It's not a great story because it gets rent from rental real estate properties, retail shopping centers, etc. Pays a nice dividend, and the whole purpose of this is to generate a steady income for its owners. So there were some REITs that I liked. Most of the e-commerce we talked about. Chewy, let's take a look at Chewy for a second. Chewy pullback to support, breaking out. I like that. Let's just go look at Chewy in Thinkorswim. So it should open up my chart here, not here. So I've got this one. It's not old enough to have the earnings per share curve. Okay. So I have a new buy signal. Here's the chandelier underneath, supporting it. That would be where my stop is, or around that area. Dr. KRSI fired a little while ago, but it's still supporting of a buy. Let's look at it over here. We had a new moving average crossover. I like Chewy, and Chewy is on my buy watch list. Let's go back to the list. What else do I want to point out that I haven't talked about? Beware of earnings. Several of the software stocks have earnings. BioMarin, another pattern I like. I like things that go sideways in a squeeze and break out. BMRN. So let's just very quickly go here. And I want to change something here. So I'm going to customize. And I want to take that little red thing, and I want to move it all the way to the top. So BioMarin is on my buy watch list. And notice it had the moving average change, daily momentum, and the kahuna. The only thing that doesn't like it is the RSI. Why doesn't the RSI like it? Because this was a better time to buy it, I guess. It really didn't do anything since then. Here was a great time to buy it where it had a big move. Here's seasonality. Positive, not a great seasonality, but positive. Here's your person buy signal. And it too had a moving average crossover here as well. So I'll leave my buy list up for a while. I take my list, I put them into TradeStation and MarketWatch, and I watch them. I look for stocks that meet my requirements. I put in conditional orders, and that's my story. Have a wonderful Memorial Day. Once again, thank you so much to those who served us then or now, who lost somebody in the service, whose family served, and for those that are serving in the front lines of the healthcare system today. Have a great holiday, a safe holiday, and we'll see you next week.